We don't try to do things in a vacuum here and just develop products without input from the marketplace. And I think that's a critical part of our success and will be going forward as we bring these products and relationships to the marketplace.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abaxx Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets?
Welcome back to the future of energy on Smarter Markets. I'm Dave Greely, Chief Economist at Abaxx Technologies. Our guest today is Joe Raia, Chief Commercial Officer at Abaxx Exchange and Clearinghouse, which commenced trading in its new physically deliverable LNG and carbon futures contracts yesterday. We'll be discussing what it takes to build smarter markets for the future of energy and where we're going next. Hello, Joe. Welcome back to Smarter Markets.
Thanks, Dave. Good to be back again.
It's good to have you. Yesterday was a very big day for you and all of our colleagues at Abaxx Exchange and Clearing, as the first trading began in its physically deliverable LNG and carbon futures contracts. You personally have been working towards this launch for over 4 years now. How does it feel?
It's a great question. I think one that always asks us, okay, you've worked all these years to this. What's the feeling about launching something so important as that we've worked so hard to achieve? And it feels great. I think it's just a culmination of all the hard work that our fantastic team has put in across technology and regulations and legal and compliance and trading. And it's just amazing how many people really are involved in this effort, in any effort like this. And we always talk about how few of these entities like ours in the clearing space, risk mitigation space, as a clearinghouse, as a regulated clearinghouse, are out there. It's hard to do. We can certainly attest to that, how hard it is, the cost of it, the need to make sure that everything that we've done brings us to this point. And whether it's products or our systems or our partners, we really are very fortunate to have great partners with us across the board, both externally and internally. So yeah, it feels great. We know that our hard work, just from my past experience in launching entities like this and new products, the hard work starts for us now. The good work starts too, because we do have something to point to bring customers to that is different than the incumbents that offer products that are not found out in the marketplace today, and really will help bring better transparency and risk processes to our customers and ultimately to the marketplace.
And I wanted to ask you about that need you see and some of the things that aren't available in other places, because you've worked in the futures and derivatives industry for a long time. And I was curious, why did you see a need to build a new commodity futures exchange from the ground up?
Well, I think as many people that follow us know, the work that we started more than 5 years ago now was focused on the LNG markets. We saw the change, the paradigm change in the structure of that market almost 6 years ago with the addition of spot market trading in that space. Also, the increase in production from shale gas in the US, which dramatically changed the amount of cargoes, the amount of molecules that was being offered onto the marketplace. I think a lot of people know most LNG projects and agreements basically in the past were from point A to point B, from producer to receiver, whether it was a power plant up in Japan or a manufacturing facilities up in China. Generally, when projects were developed, they would basically build a ship around that project and for 20 years transport that gas in LNG form up to the receiver. Those projects generally started to come to an end, and you see more firms now engaging in spot market activity as those projects and those term contracts, those 20-year term contracts have generally come to an end. And so with that, the market has moved from almost predominantly term structure to, we say, probably somewhere near 50% of now spot market cargoes that are on the marketplace. And that's growing. That's continuing to grow as new production of shale gas comes on the market. With that, though, is really no underlying futures contract or underlying benchmark that is directly correlated for all those extra cargoes that are on the waterplace. And added to that, we hear from most of our large trading firms, whether they're the big institutional energy companies, trading firms, that optimization of their existing portfolio of all whatever remaining term contracts they have is also happening to the point of upwards of 80%, if not more, of the overall portfolio of a particular firm is now being optimized, meaning they're arbing one location from another. Again, instead of being on that railroad track from the production side to the receiver, they're actually now looking to send the ship maybe from Qatar to Japan. And instead of sending that ship back to Qatar for another cargo, they may bring that to Malaysia or even to potentially to the US. So there's a lot of that optimization going on instead of the railroad track. And again, the gap that we saw in the marketplace back then and still literally existed until yesterday when we launched our LNG futures contracts is the lack of any underlying benchmark contract for pricing transparency, for risk management of those cargoes.
And I want to come back and talk with you about some of the individual markets that you're launching. But first, I wanted to ask you, because knowing you, I know that you were adamant from day one that Abaxx needed to build its own clearinghouse.
Correct.
And other exchanges haven't. ICE launched without its own clearinghouse back in the day. More recently, FMX Futures Exchange is planning on launching with interest rate derivatives without its own clearinghouse. So, why was Abaxx having its own clearinghouse so important to you?
We debated that internally 4 or 5 years ago. What was the best? Once we decided that all the feedback we got from the marketplace was that LNG futures were the right way to go and the marketplace needed a futures contract and not another index. We hear that literally every day now from not only in LNG, but other products that we're launching. But the index related products or the non correlated products that LNG was being priced on was really part of the issue or part of the problem that we were looking to solve and solve for with an LNG futures contract. We could have looked at off basically partnering with another clearinghouse to list our products there. But again, the experience you mentioned when ICE launched back in 2002, they were clearing through a London clearinghouse. We launched at literally the same time with Clearport, and we had our own clearinghouse at the NYMEX. And that gave us the flexibility to address the issues in the marketplace more quickly, to bring new products to the marketplace more quickly. Whereas I always had to go back to LCH and ask them to list another new product or another new market. And it was very cumbersome for them and costly to do that, and gave us at the NYMEX the opportunity to continue to roll out products. Even though we didn't have an electronic trading platform, we had the brokers that were submitting block trades to us. That gave us the ability to expand our breadth of products quite substantially and a lot quicker, which at that point gave us a competitive edge for bringing those new products to the marketplace. And ultimately the success, not only the NYMEX, but Clearport specifically as a new platform for risk mitigation in the marketplace.
You've talked about LNG a couple times now, and I wanted to ask you one more question on it, which was, of course, when you joined Abaxx 4 or 5 years ago, the focus really was on producing a physically deliverable LNG futures contract. That product slate now is widened out. There's carbon moving into battery metals. But I wanted to ask you, when you first came to Abaxx, what really interested you in building an LNG futures market for physically deliverable cargoes?
Yeah, I think it was the people that were here at the time. Dan McElduff and I were partners at the NYMEX. When we built Clearport, he was in the research group. He helped develop a lot of those new products. I knew he understood complexities and difficulties of exchange world and futures world and having to build something or sustain something like that and all the intricacies of it. We were talking to Dan. I knew there were a long haul to get the exchange and the clearinghouse built and stood up and launched. But I knew that given his background, my background, I felt that it was going to be a good partnership to bring what we built at the NYMEX over to here. And also with Josh, I had met Josh. Dan introduced me to Josh and met Josh probably 5 years ago. And his vision of not only building something that's relatively similar to what's out there, but also his technology vision I felt was important. I had seen both from my experiences at both NYMEX and CME, and then also moving over to Goldman. Those experiences brought me to see both sides of the marketplace from the exchange and clearinghouse side, but also from the largest clearing firm in the commodity clearing world. to see the difficulties and the issues that were out there from things like margin and collateral management, that simple clearing technology that needed to be addressed that hadn't been addressed for a long time. So for me, those two things together, really meeting Josh and meeting Dan and talking about the products and trying to replicate in some way the success that we built at the NYMEX back in the day, which obviously led to the merger with the CME from the Clearport platform and the revenue we generated there, to see if we can replicate that here. I think looking at the clearinghouse, how we built it, the products that we're looking at, you mentioned not only just LNG, but carbon, battery metals, other products, precious metals. There is a big opportunity in products that the incumbent exchanges have generally, as they broadened out into other non-commodity asset classes, have generally overlooked. And there's great opportunities for us. And I think most importantly, those opportunities come from relationships, and the relationship built that we've built in the marketplace and others have built over the years brings us these new opportunities. They've come in, I would say, from day one, and they continue to be brought to us for new product opportunities. And well, I'm sure as we get further down the road this summer into our launch, we'll continue to see new product opportunities be presented to us.
And now that vision, with a lot of hard work over 4 or 5 years, has turned into the reality of an operating exchange and clearinghouse. Trading's commenced, and soon it'll be followed by nickel sulfate and more. And I wanted to ask you, Joe, how has your thinking about which products to develop evolved over the past few years? And how much is the move to a lower carbon energy system influencing your product pipeline?
That's a great question. I think in the back of our minds, or in front of our minds, even when we look at new products, we certainly look at a lower carbon energy transition type. Words used quite loosely in the marketplace, as ESG used to be. The energy transition, I think, has taken over from that. But we do really keep in the back of our minds the lower carbon structure of the products that we look at. We certainly think that LNG and know that LNG is not only an energy transition product, it's an energy solution product. And as we were working through the development of those products, the carbon markets were started to develop, and we really started to hear from the marketplace and the traders that carbon was going to be an important part. And this is now going back probably 3.5 years ago, that the voluntary carbon markets were going to be an important part of a growing low carbon solution products. We've seen the big energy companies like the Exxons and the Chevrons look at low carbon solution groups within their entities, and those are also out there looking for lower carbon solutions for the products that they bring to the marketplace. And there's, again, a whole host of products in battery metals and sustainable aviation fuels and others that we can look at. And even also looking to, I would say, offers low carbon solution products to the marketplace that are maybe offset with voluntary carbon market projects that are, monitored and verified. That could be products that we look at in the future. So that's always in the back of our mind. We want to obviously bring products that the marketplace will use that are relevant, and also partner, as we have with our products, from start to now, with the trading community, with the clearing community, to figure out what is the best products to bring out there for a better price transparency ultimately, and also better risk management tools.
This podcast series, we're focused on the future of energy. And as part of your partnerships and product development, you talk with many market participants. So I wanted to get your perspective on how are the market participants that you talk with thinking about the future of energy?
It's a good question. They do look at spot market type structure of what they're looking at. But when we start talking and digging into the firms, to the senior leadership of these firms, whether it's in trading firms or clearing firms, they do look at what else is out there to bring to the marketplace. How can they partner with us to utilize our clearinghouse for risk management, price transparency for some of these markets that haven't been developed yet? They certainly take time. We think that we have our research and product development group that will be able to bring these products to market relatively quickly. But certainly we need their buy-in. We need pools of liquidity to basically commit to us that they have interest in trading these products if we do build them and launch them.
Abaxx Exchange and Clearinghouse is arguably the first commodities exchange and clearinghouse focused on physical delivery, independently established in over a decade. As you alluded to earlier, there are reasons that there aren't many futures exchange and clearinghouses in the world. It's hard. And I wanted to ask you, looking back over your experience over the past 4 or 5 years, what do you think's been critical in getting you to this point?
I think it's a combination of the products, the customers that reach out to their clearing firms to tell them that they want to utilize our products, clearing firm partners of ours, Donex, KGI, and others that will be coming on board that really committed, took a chance on us. And that's, from my experience in building products and clearing houses and exchanges of my career, the thing that you want to say is relatively commonplace is new products. And so, but back in the day when we launched Clearport, we were focusing mostly on financially settled products, index related products that in natural gas, mostly that were tied to a Platts published basis contract. Those are relatively easy to launch. But even with those, you had to get clearing firms that would permission their customers to trade those. Not a hard task, but not necessarily back in those days. Nat gas basis contracts were never even traded on any exchange. And so FCMs, clearing members, didn't have any ability to understand. We had to educate them to those products and understand if there was a default, how would they manage a default? What's the margins? What's their risk? Allowing their customers to trade those contracts. That's somewhat the easy part. When you start looking at a new exchange, again, at that level of complexity and difficulty goes up quite a bit. But again, when you add a new clearinghouse on top of new exchange, on top of new products, you really had an incredible amount of complexity and difficulty, so to speak. A clearing firm needs to look at allowing their customers to trade these products, whether it's LNG or carbon or nickel sulfate. Those are brand new. They don't exist in the marketplace, pretty much the exception of carbon, although our carbon contract is a bit different than what's out there. But when you look at the products, LNG futures, physically deliverable global futures doesn't exist. And those are different risk type structures that have to be looked at from the clearing side and even from the trading side. Things are different today than back in 2002. When we launched Clearport, trading firms were very eager to find a way to mitigate their risk in the marketplace and moving from a bilateral structure that they had been involved in up to the Enron default in 2001, looking at Clearport and ICE Block and ICE Clear in '02 as an alternative to their trading and bringing in futures. And so that onboarding or that adoption was relatively quick. Here we have a brand new clearinghouse, a brand new exchange, and brand new products. And so the trading firms and their internal structure now for onboarding is completely different than it was back then. And so we have that piece of the equation that also we have to satisfy for as we're now launched and bringing new clients in.
You've mentioned one of the things that's critical are these connections and relationships, and establishing these new connections relies on existing relationships. And I would say you have more connections and deeper relationships than anyone I've known in commodities. And I was curious, just on a personal basis, how have you cultivated and developed those relationships over the years?
That's an interesting point, Dave. I think I always tell my kids never burn a bridge. Relationships are the most valuable. And also the people that I've worked with too over the years. I've had so many people at the NYMEX and the CME and at Goldman. I was mentoring during my times there. And, the relationship part of the business is something that I've always stressed as valuable as anything. It's very easy to lose a relationship. It takes a long time to build it. And I think if you're honest, if you're true to your word, if you're really looking to help firms to figure out what's the best thing that they can utilize in the markets, ultimately, you can't guarantee a follow through from new products, but you certainly, and I think in my career, have built all these relationships and have tried always to nurture them and to keep them as valuable as anything that I have. Markets have changed over the years. People come and go, and I've been in it a long time. So a lot of the people that I've started working with are certainly not in the business anymore, but it's to be surprised at how many still are. And I think that those folks do remember what we built at the NYMEX and back at Goldman and how we, engaged with them to bring better solutions to the marketplace ultimately. And I think if you really engage with them and make them part of the conversation, it's really an important part of building that relationship. We don't try to do things in a vacuum here and just develop products without input from the marketplace. And I think that's a critical part of our success and will be going forward as we bring these products and relationships to the marketplace.
There's a lot of Goldman and NYMEX DNA in the Abaxx team, a lot of experience, people drawn from both companies. Interestingly, I think you may be the one person who has both, having worked at both Goldman and NYMEX. And so you're the right person to ask. What lessons did you learn from your experience at both that you might want to apply at Abaxx? And, perhaps what do you want to do differently?
My years at the NYMEX were an incredible evolution there very quickly. I think somebody used to say there, well, evolution takes, hundreds and thousands of years. At the NYMEX, we went from a membership organization prior to 2002 to demutualizing private equity investment to going electronic, all of those changes in a very quick time frame to then going public and to launching other exchanges within the exchange. I think goes back to the relationship question. Those are an important part, but it also goes back to the business question. What are you learning and how are you experiencing these changes in the business model? And that was a massively huge paradigm shift from the membership model to now a public entity and now merging with one of the larger exchanges in the marketplace at the CME, and how we integrated with them there, which was generally pretty smooth. That was an interesting time. I know there was a financial crisis in 2007. We went public just before that, thankfully, and grew the exchange quite significantly after we went electronic and brought new products to the marketplace continually. I think, as we talked about in the past, I brought almost 2,000 products to the marketplace during my time there. The CME back then got what we were doing and understood it. But then the opportunity at Goldman came along, and I was looking to bring the relationship part. And I think what attracted the Goldman Clearing Group, Jack McCabe and Mike Dawley, who were the partners that ran the clearing group globally, to what I was doing at the NYMEX and CME was the relationship part of the business. It always goes back to that. And they were looking to, at Goldman, bring some of the bigger players in the energy markets that they didn't have on board with them, surprisingly, or hardly at all, into their clearing entity, and to bring the systems and technology that we had at Goldman and the balance sheet ultimately to help these firms manage their risk in commodity markets. And so going up to Goldman, I think the amount of smart people are there, and you were one of them, with my relationship experience and the talent that Goldman had from just the brain power there was really, I thought, an incredibly fortunate experience for me, especially going over as a managing director, as a lateral hire, which didn't happen, as you know, too often. That lateral hire MD was for me a really great time in my career. And I was able to really help them grow their clearing business, bring in new relationships in some of the biggest trading firms in the world, and look to see, as I moved to go to Abaxx, to look at some of those needs from a clearing perspective in technology and better collateral management that we can then apply here at Abaxx that could help both the Goldmans of the world, all the clearing firms, whether they're big or small, but also the customers that they have. So Goldman utilizing my past experience at the exchange, but that now looking at both of those experiences to bring better solutions to our customers here at Abaxx.
Now I'm going to come back to you with the hard question. Anything you would do differently?
I don't think so. Yeah, it's a good question. I have, I even go back to my seagoing career and look at how you manage people back then. And people always ask me, how did you end up going from a merchant marine officer to working at Goldman to working at exchanges? There's a lot more connectivity in the DNA side of that than I think people think. But I think ultimately it's all connected. And I think you build on your past experiences to just better yourself ultimately, but also better the people that you come across as you go through that journey. And yeah, I don't think I would do anything different. I'm so glad I came over here 5 years ago. The team we have here, again, as I said earlier, is really second to none. It replicates a lot of the things that we did really well at the NYMEX. It replicates a lot of the things that we did really well at Goldman. And, I think that a lot of good things are ahead for us and also for the customers that we bring on board with us here. So very excited about that.
All right, enough about the past. We'll move on to the future. Clearly, trading's commenced in LNG and carbon on Abaxx Exchange. I wanted to know, based on your experience, how do you see liquidity and volumes developing from here?
Yeah, it's everybody asks that question. Is it going to be Black Friday where they come busting through the doors to buy TVs? Probably not. I think we probably wouldn't want that, just to make sure that, again, systematically, we have everything we know is working fine. But we want to make sure that we gone through testing programs here. But we know that, and just from my experience, and I think Dan's experience, when you develop new products like this, it does take time to develop liquidity. It takes time for firms that even first trades, they put the trade on, they wait for it to settle, they wait for the margin to make sure that flows, and then the positions show up in their accounts. And so again, there's a lot of things that happen post trade T or T+1 that firms are going to wait to make sure that they're okay with the flow of information. Then we're off to the races. I think that, it will take a bit of time. It's summertime. It's not the busiest time of year. People always ask, when's a good time to launch a new product or a new exchange or a new clearinghouse? And I don't think there's always a perfect time. So back in the day when we launched Clearport, Vinny Viola said, launch it tomorrow. And we did that with, a lot of things hanging in the air. Here, obviously, right, the regulatory structure of the marketplace is way different today than it was back in 2002. But, we know our systems are sound. We know the customers are onboarding with us. I think that was the nice surprise over, as much as we've been promoting this over 5 years now, the amount of inbounds from customers to set themselves up with us to trade, both electronically and block trades, has been a nice, I think, a validation of what we've done. The hard work for us, again, as I said earlier, starts now. Now we have something that we can point to customers to say we are live. You can trade. Here's how you access our markets. Versus we're coming in 3 months or 6 months, or as Dan used to like to say, we've been launching in 6 months for 5 years. That point has come now, and we're really happy that we've got to this point. And I think we'll continue to see interest for new products. At the lithium conference I was at out on the West Coast, the inbounds from customers that were there, the very large customers for new products in the marketplace, just continues. So they see that the clearinghouse model is sound. They want to participate in it, and they want us to help them build better tools for that.
And I feel like I should be telling you, take some time to relax, take a walk on the beach, play a round of golf. But as you said, now's when the hard work starts. So instead, I'll ask you, what's next as you take this new commodity futures exchange and clearinghouse into the future of energy? What are you focused on?
I think it's the technology side. There's been a huge gap. There's nothing wrong with the way the market works now. It's very efficient, from a technology trading perspective, but from a collateral management perspective, there have always been, especially during spikes in the marketplace. If you go back a couple of years when we had the Russian invasion of Ukraine, natural gas prices spiked massively in Europe because of the cutoff of natural gas to Ukraine and partially to Europe. That use of collateral and margins on exchange, there needs to be a better solution for that. I can say that we're working on better solutions in technology with digital identity, with tagging of physical products. There's a lot that the time between we started this and when we launched yesterday has given us the opportunity to focus not only on the exchange and the products, but also on the technology side pretty comfortably, that there'll be some good things coming down the road for us on the technology side also.
Thanks, Joe.
Thanks, Dave. Always a pleasure.
Thanks again to Joe Raia, Chief Commercial Officer at Abaxx Exchange and Clearinghouse. We hope you enjoyed the episode. We'll be back next week with another episode of The Future of Energy. We hope you'll join us.
This episode was brought to you in part by Abaxx Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets? Contact us at onboarding@abaxx.exchange. That concludes this week's episode of Smarter Markets by Abaxx. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abaxx Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.